Now it's a different game. We have sovereign countries buying real physical silver, and that's the Achilles heel for the bullion banks, which I suspect they short the precious metals and especially silver. I would say a lot of it is for the central banks. Thursday, November 27th, 2025. Maneco 64, home of alternative economics and contrarian views. So happy Thanksgiving to my viewers in the US. And today we're going to look at silver because I think silver is ready to really blow the top of that teacup and handle that we've had for 45 years. I see the mother of all short squeezes in silver, yes. There was a short squeeze movement back in 2021, and I remember it well. I remember doing a live stream, I think, for Arcadia Economics with a lot of other panelists. That was on a Sunday night when silver was opening and actually trading above 30. And I said at the time when I was asked the question, I said we need to be cautious because the central banks, the CFTC, and the bullion banks, they're going to try to tamp down the price of silver, which is what subsequently the head of the CFTC said. We had to tamp down the silver price. And yeah, they were able to stop silver on its tracks from breaking 30. And yeah, I said at the time, you know, we need to keep an eye on this. I'm not that convinced, but why would it be different this time? And that's what we're gonna touch upon here. Before I start, I'd like to give a shout out to my precious metals dealer affiliates, Miles Franklin in the US. If you want to get in touch with them, best way is to send them an email, info@milesfranklin.com. Mention that Mario or Maneco 64 sent you, and they'll do their best to serve you, whether you are a veteran stacker or whether you're going to do it for the first time. I think, yes, we still have time to get cheap silver before it goes into triple digits. And gold as well, for that matter. I think gold is going to keep going, even though silver is going to outperform, in my opinion. And here in the UK, it's Gold Investments. All the details are below in the description of how to get in touch with Oliver or Simon Temple. I've been dealing with Gold Investments on a personal basis for over 20 years, and I can vouch for them. So back to silver. Why is it different this time? Well, it's different this time because we've got what Zoltan Pozar said a few years ago, the commodity war. Basically, the petrodollar's finished. John Connolly's comment about the dollar being the US's currency, but your problem, talking to other finance ministers from around the world, that's finished now because the dollar is waning as a major reserve currency, and gold, of course, is becoming the major reserve asset. And with the world getting divided into blocks, with globalization waning as well, commodities are going to be the most important asset, in my opinion, going forward. And countries are going to do the most they can to protect them. And that's why China and the US have declared recently that silver is now a critical mineral or precious metal. And I think other countries are realizing this, and they're trying to jump ahead of the US and China and buying their own physical silver. And that's why I've been hearing from very good sources I can't go into too much detail. There's a lot of central bank buying, especially in the Middle East, not just of physical gold, but silver as well, that they're also buying futures contract on COMEX for delivery. And is it any wonder that the LBMA stocks of silver are near record lows, and we're still seeing some backwardation in silver, which is a sign that people want the physical. So that's the main difference. Back in 2021, there was no interest from major institutions, from very wealthy individuals like David Bateman, billionaire tech entrepreneur who's bought loads of silver and gold. Yes, it was still just a paper game, and here we were, the small retail silver bugs or silver apes were trying to go against Goliath, I guess, and we kind of failed, but now it's a different game. We have sovereign countries buying real physical silver, and that's the Achilles heel for the bullion banks, which I suspect they short the precious metals and especially silver. I would say a lot of it is for the central banks, so they will be covered in terms of losses. The central banks will make them whole. And why do I say that? Well, because silver is like a major canary in the coal mine for the fiat regime system. And I was speaking, I've been speaking about this to the Nome of Zurich, and he's done a lot of study long term, and he looked at open interest on COMEX in the 70s, and it was huge for silver. And right around the time that the Hunt brothers were stopped from cornering the market, open interest in silver collapsed. And the Nome of Zurich thinks a lot of the open interest in silver is indirectly for the central banks, for the Fed, for the Bank of England. But now with sovereign countries buying real physical silver, and we've been hearing, of course, that Turkey's buying a lot of silver, India's buying a lot of silver, China, even though the Chinese silver, some of it has gone back to the LBMA for, because they have a shortage there. Recently, or yesterday, Eric Young posted this tweet here, or on X, and he said, Bloomberg says what Oriental Ghost and me have been saying for the last couple of weeks. Chinese silver stockpiles has been drained to the lowest levels ever. Whatever silver that was shipped from the Shanghai Gold Exchange to LBMA, London, was leased silver. That probably has to be returned to China in December. So that's what it's all about. The silver, people want physical silver. And yes, I've been hearing from good sources, as I've been saying recently, that Middle Eastern central banks, like Gulf Cooperation central banks, are buying physical gold and silver. Speculation from my sources that they could even be doing it for the Chinese. This morning, for example, and I'm in London for those of you who don't know, and it's just before 8 a.m. Yes, and the futures are open despite Thanksgiving. The schedule might be a little shortened. I'm not too sure what time it will close, but I noticed this morning, I get up very early, that silver was down like quite a bit, like 50 cents. I think the low overnight, let's see here, was around 52.70. And then right around 5 a.m. London, which is 8 a.m. Saudi Arabia time, and 9 a.m. Dubai or United Arab Emirates time, or Qatar time, silver started picking up. Am I saying they're buying silver? It could be. I haven't heard from my source, but I bet he might call later on today and tell me that they've been buying this morning. And that's what it's all about. And why do I think that we're going to have the mother of all short squeezes? And I wouldn't be surprised if we see silver at $100. Even before the end of the year, or maybe by January. I think it's going to get really explosive. And one of the reasons for that is because of that 45-year teacup and handle formation, the mother of all teacups. We've spoken about that. And of course, I've been buying silver since 2003. I started like a year after started buying gold. And silver was around $4 or $5, and it's been a rewarding experience, but at times frustrating, because we silver bugs and also gold bugs, we know how manipulated this market is, how important this market is. Every time silver spikes, let's say to near 50, like it did in 1980 and 2011, it means there's like some kind of crisis. And there were crises in 1980. The dollar, the fiat dollar, was almost on its way out. Jimmy Carter was issuing foreign currency treasuries because people didn't want the dollar. And in 2011, the Euro project was on its knees, and Portugal, Italy, Ireland, Greece, and Spain, they almost went bust. So something dramatic, something much bigger than just a financial crisis is happening here. And what do I mean by that? Well, I think it's monetary chaos. That's what it is, and silver's pointing to that. And if you haven't gotten your silver yet, your physical silver, I think you'll be kicking yourself, because right now you can still buy it for around $50, just a little more than 50. But pretty soon, $50 is going to be history. And the same thing goes for gold, in my opinion. So why is this teacup formation so important? Well, because they're very bullish formations, and this one is the longest I've ever seen, and probably anyone who follows technical analysis ever seen. And the handle took from 2011 to April 2024 for us to break through the handle. So 13 years, and we're now on the monthly chart here, as you can see. If we stay above 51 by the end of trading tomorrow, Friday, November 28th, it means that we've blown off the roof of the teacup, the top of the teacup, and that's very significant, and that's why I think it's explosive. It's the mother of all teacups being broken, and I've seen analysts talk about silver going up $5-10 a day. I think that's what we're going to start seeing. We saw that back in 05, 06, 07. I remember well. We did see $5 silver days, but back then we're trading in the teens, and we were seeing that. And now we're trading in the 50s. So $5-10 days, or even $15 days, would not surprise me. And that's why I think you need to hold on to your physical silver for dear life. It's not for trading. You might want to trade more medium to longer term your mining stocks and silver miners in particular. And I wanted to touch upon that as well, because Peter Spina, from the founder of GoldSeek and SilverSeek, and I used to listen to GoldSeek radio prior to there being YouTube, really. I used to listen to that every weekend with my wife. I love Silver Seek and Gold Seek. And I saw Peter Spinner in Zurich, and he actually interviewed me for Gold Seek Radio. If you're an ex, go onto Peter Spinner's handle. It's at Gold Seek, and he published our interview in Zurich. It was a 10-minute interview. I really enjoyed it, and he's a great guy. He posted this 3 hours ago, and I'll read for you. The only good reason to own gold and silver stocks is to outperform the gold and silver price. The risks you take on must be rewarded with higher returns, especially in a bull market. So far, the outperformance of the equities is not yet rewarding the risks. And Peter's a relatively young guy compared to me, but he's been in this space, precious metals, since he was a teenager. He's done really well, so he knows what he's talking about. An acceleration phase is needed for rewarding these risks. And he says, I believe this to be the start of the next and more exciting phase of the bull run. The stealth move in precious metals has been ignored for a huge portion of its run. This is no longer the case. The bull has been unleashed for all to see. Many are going to join the ride in a relatively small gold-silver market. Silver above $50 an ounce plus, with retail flipping into net buyers, is a big sign. More specifically, the gold to silver ratio will be the true indicator of the big run in gold and silver stocks. The lower the ratio goes, the faster the silver price rises, the more of an indication that the next buying wave of retail to other wealth categories enter the precious metals markets. This looks to be one of the easiest risk to reward investment opportunities in this market, maybe ever. You have a clear breakout in the gold and silver prices. The stocks have incredible catch-up work to do. A massive melt-up phase is coming. My 2 troy ounces, Peter. Of course, this is not financial advice. This is Peter's opinion, and I agree with Peter. So it's just my opinion as well. Let's look at the gold-silver ratio, because I was talking to the Gnome of Zurich yesterday, and he was telling me that there's a key technical level around 78, and I suspect we might be breaking that this morning. So let's have a look. Yeah, we are breaking that. We are at 77.62 as I speak here on November 27th, 8:05 a.m. London. Why do I say the time? Well, because you could be watching this later and it will be a completely different price. But if you look at this chart here, we've been consolidating and now it's breaking down. This is very bullish, well, bearish for the ratio, which is very bullish for silver and gold for that matter. It means that silver is outperforming. So let's see where these markets are then. Well, gold is at 41.62, is down a buck, so not doing much. High's been 69, low 42, but it's silver that's performing in a stellar fashion, in my opinion, this morning, because it's come from being 50 cents down to now being almost 50 cents up, and we're at 53.83. High's been 53.92. So as I said, if we close comfortably above 51 by the end of trade tomorrow, very bullish, and we could take off even before tomorrow. If we break 54.60, which is the all-time high from October, we could see some fireworks, especially due to the fact that it's a thin market during Thanksgiving, because a lot of people are out of the market in the US. So yeah, hold on to your hats, hold on to your physical. Yeah, be nimble with your miners, And yeah, let's keep an eye on things. I think the silver squeeze is finally here. And that's another thing that my source said. These people know, these central bankers know that there's a huge short position, paper short position, and they're exploiting that. So there you go. With that, I'm going to wish you all a very good day. And again, for my viewers in the US, a great Thanksgiving and a great Thanksgiving weekend. Take care. Bye.